So here we are. So we're going to do a general JobKeeper update, and that also includes updating you a bit on JobKeeper 1 and some of the changes that have happened that I'm assuming you're aware of, but I'd rather just quickly whiz through those to make sure that we're all on the same page. Okay, JobKeeper, we're calling it 1.1. So you remember 6 months ago, we talked about JobKeeper, and yes, it feels like a lifetime ago, but it is only just 6 months. We talked about JobKeeper, and there were 3 main things that we focused on at that time. The first one is seeing whether you were an eligible employer, and that was doing the turnover test of whether your turnover had reduced, your GST turnover had reduced by the 30%, the 50% if you're a larger business, and the 15% for a not-for-profit, okay? We talked about eligible employers. Then we looked at our eligible employees to see if we had any eligible employees under the requirements there. And we also had to meet the wage test and do the required administration to be eligible for JobKeeper. Now, if you remember, eligible employees were employees that were tested at 1 March. So it was people that were already employed by you at 1 March and who met the other eligibility criteria. Well, JobKeeper 1.1, what they did was they made effective from fortnights from the 3rd of August, they put a new testing date into the rules of 1 July. Okay, what this meant, and this was designed really because we had shut down back in April across the country by and large. A lot of places and states, and we're lucky enough to sit here in Queensland, reopened, and then we had what they're calling a second wave. And so I suspect that's why they brought in the 1 July test date as well into JobKeeper 1. So if you had employed someone after 1 March, so they weren't eligible on your original JobKeeper, after 1 March, before 1 July, on or before 1 July, they should have been brought onto your JobKeeper. And that's from the fortnight starting the 3rd of August right through to the end. So that meant that for anybody that was maybe a long-term casual that hadn't met the 12-month requisite period at 1 March, but had met it at 1 July, could have been brought on. That meant that somebody who was a new employee could have been brought on. It might even be that you had someone who was a 16, 17-year-old. Now, remember when they first brought out the rules, 16, 17-year-olds were eligible. They then quickly changed them to say that you had to be independent of, I guess, family and working. So then they took it back to being over 18. In most cases. If that person that was then no longer eligible for JobKeeper has turned 18 in that period, then they could have been brought onto JobKeeper. Okay, so it may also be new citizens that are employees. Oh, I can admit from here. That's worked out very well. Perfect. So remember that there is a one-in, all-in rule. And that means that you actually didn't have a choice. You needed to provide those eligible employees that became eligible with the nomination form and go through and put them on JobKeeper. Okay. Now, there was no need to retest to bring those employees in. You were already in JobKeeper 1, so there's no retesting. It is an employment and eligible employee test date change. Unfortunately, if this can move along, let me go back. So there's your requirements that have to have been paid. Now look at that wage condition. What that meant is, say that you had a long-term casual that was not eligible at 1 March, but they'd met their 12-month requirement, say in May. They should have, and maybe they were only being paid $1,000 a fortnight. There was a top-up required effective from the 3rd of August, okay? So that's something that may or may not have been missed, and it's something that we're seeing a bit of where people weren't aware of this change and also the fact that August had 3 fortnights in it for JobKeeper. But what you can do is you can have a look at ways to rectify that, because it is a one-in, all-in, and that top-up is actually going to be an obligation. The important dates that related to that, I know it's after the fact, and if you got our client mail out, then you would have seen an email on this or mail out on this prior to these dates, but you actually had only until the 24th of August to provide employees with a nomination notice, and the 31st of August to make sure that those August fortnights had been topped up. But I've got a note on there is the ability within the rules to seek the Commission's discretion to treat a payment as having been made on time. Okay. Now, I'm not going to say much more on JobKeeper 1 because that's about to wrap up, okay? As you know, that's going to finish on the 27th of September, so we're coming to the very end of it. The reason you're all here is to hear about JobKeeper 2. So let's go and talk about that. Slides taking a bit to catch up. JobKeeper 2. All right. Just going to fix that. So what's changed? Well, as you know, and you've probably heard in the press, it's a 6-month extension. Okay, there's 2 periods though of JobKeeper. So it's a 2-tiered system as well. So we've got different reference periods, we've got different payments, and it's a gradual reduction for businesses to take them back out of the JobKeeper system. This is finishing on the 28th of March at the latest, at today's date, like as at today. And I guess like we thought JobKeeper would be hard and fast finish the 27th of September, we could very well see how the world is turning and what happens after that date. So a couple of things have changed, but I'm going to actually tell you what hasn't changed because that's going to make your life hopefully a little bit simpler. What hasn't changed? The requirement for employees to satisfy the wage condition. Now, remember, that's the requirement to make a payment of at least a minimum amount of JobKeeper in the JobKeeper fortnight. Now, there's concessions in there for different pay cycles, but essentially it was a $1,500 a fortnight. We're going to be changing that under this new system, but the requirement to pay employees at least that, now that includes pay-as-you-go withholding, so you still withhold from those amounts, is still there. So you may still have some employees that are getting topped up, and that's something to be on top of quite quickly so that you can meet that requirement when the time comes in a week, 2 weeks' time. Okay, the decline in turnover rates haven't changed either. We're still testing that 15, 30 and 50% depending on your business. The ability for ACNC registered charities to elect to exclude government grants from turnover, that will continue, that will roll through. The rules around service entity arrangements are still there. So if you've got largely an employment entity that charges a fee across to a business operating entity, those rules are still effective. The meaning of eligible employee and eligible business participant. So basically we're still testing employees on the basic rules and business participants on the basic rules we already had. What they've done is they've added an extra layer of complexity to testing them for the extension period. There's still the one-in, all-in rule. So there's no handpicking which employees get access to JobKeeper. Once you enter into the system and put employees on JobKeeper, all eligible employees are to be on JobKeeper. There's still the rules around preventing an employee from putting in a nomination notice to more than one in business. And the ATO interaction we don't believe is going to change too much. So the time you're receiving payments, there's no information that says that's going to change. Enrolling for the first time, because some businesses will enrol for the first time in the extension period, and the monthly reporting requirements. Now the monthly reporting requirements are interesting because when we go to the next slide, or the next couple of slides, you'll see we're testing eligibility based on a quarter, but we're still going to be reporting on a monthly basis. So they're the things that haven't changed. That's a big chunk of the rules. What we're going to do is focus on what has changed and how you determine whether you're eligible under this extension period. So now JobKeeper is a 2-tiered system. We've broken it down into 2 3-month chunks essentially. We need to go and test employees. So if you've, well, I've got the testing employees. I've also got testing employers. So now I'm wondering if I've got these in the right order, but that's okay. An eligible employee is tested against basically 4 weeks in February. Okay, so it says 28 days prior to 1 March or 1 July. So test your 1 March and then test your 1 July. So it's the 4 weeks before. Now, what they're saying is you don't need to use the exact 28 days before those dates. What you do is you look at your normal pay cycle and use a 28 days of pay cycles. So say you pay weekly, you'll use 4 weeks of pay. Fortnightly, you'll use 2. So long as it's finished, that pay cycle's finished before 1 March. You use that period there to test your employees and how much they worked. It's assumed if they're a full-time employee, they'll be on the higher tier. Now, the higher tier for the first tranche of this payment is $1,200 per fortnight. So that's down from $1,500. In the second period, if they tested and they were eligible employee, they'll drop to $1,000 per fortnight. If, however, they don't meet the 80-hour across those 4 weeks requirement in either that 28 days prior to 1 March or 28 days prior to 1 July, they'll fall into the second tier, which is the $750 per fortnight for the first tranche of the JobKeeper extension and $650 per fortnight for the second. And that's probably as clear as mud. All right, so what do you have to do? Each employee, you need to pull whatever records you do have that tells you how much they worked. As I said, a full-timer is probably assumed to be at the higher rate. Part-timers or casuals are probably going to be your problem. So a casual, you're going to need to pull the payroll records to have a look at what they did in those 28 days, those 4 weeks payroll cycle that finished prior to 1 March. If they don't qualify there, you're then going to test the 28 days prior to 1 July and do the same test. What that's doing is giving you 2 opportunities, and also for those employees that weren't eligible on 1 March, remember JobKeeper 1.1, the amendments to JobKeeper 1 have got the second test date of 1 July, and that's why this has come in. Okay, that's because your employee might simply not have been employed at 1 March. And so it's the 1 July employees that come in under those rules will test obviously the month of June or those 28 days. Okay, assuming you've got a bunch that qualify above 80 hours and as some that qualify under, you're going to be running 2 tiers of claims. And the forms are going to be updated. You will need to notify the ATO which employees are on which rate. Okay, so there's going to be some forms there, haven't seen them, that we need to keep an eye out for when this extension period commences. But you could do that testing now in preparation on the basis, assuming that you meet the turnover test, and I'll get to that in a second. Okay. Now, eligible business participants. We had a lot of clients put themselves as a business owner, people who weren't on payroll. And remember, the eligible business participants were someone who was actively engaged in the business. And there was 1 per entity. So it might have been a director or a shareholder of the company, a beneficiary of the trust, or a partner in partnership. And you may have 1 on that. Now, the test is slightly different. They are testing simply the month of February, which is 29 days this year. So you need to have some sort of evidence that you are actively engaged in the business for 80 hours or more in the month of February. Now, I'm not quite sure, and you'll see later, what that's going to require and how you're going to prove that to the tax office. But there's 2 tiers are based on that too. So if you've used someone who only worked very casually, maybe they had 1 or 2 other jobs, payroll records are going to tell you how much they've worked in the other businesses. Therefore, by default, you potentially haven't worked in your JobKeeper business as much and therefore may not be eligible for that. So there's going to be a little bit of work around eligible business participants, and the information on that is still a little light. We're still waiting for some more guidance. Okay, the 80-hour test for employees. What's included? Hours worked, paid leave, paid public holidays. So, for example, say someone was off sick and they'd taken annual leave, long service leave, that's still counting in towards your 80 hours, okay? What time period do I measure the 28 days? So it's based on pay cycle end. So as long as your pay cycle has ended, is the most recent one that ends before 1 March or 1 July, you can go back 28 days from the end of that pay cycle, and that's what you measure. It's not affected by when you're actually paid. So say your pay cycle finishes on a Wednesday, and I'm not sure what date the 1st of March is. Maybe it's Friday and you haven't made payments till the next Monday. That doesn't matter when it was paid. It's actually based on your pay cycle. If you pay monthly, there's a pro-ratering that happens down to the 28 days. Now, the main thing that people think about, and there was a question that came through in advance, is what records do I keep? Well, you need to keep the most accurate workplace records to show the actual hours. Now, the ATO website's just been updated, and what they've got on there is each business, they'll need to, if you don't have sufficient records, there are 3 circumstances that you can claim the tier 1, the top rate. That's if you paid your employee $1,500 or more during the 28-day reference period. And that doesn't include your JobKeeper top-ups. So if their normal pay was above $1,500 and you don't have the records to support, maybe you've lost the records, then they'll look at that. That might be one way that you can get into the tier 1, the top tier payment. You might have had a written agreement with your employee to work 80 hours or more across that 28 days. So if your employment agreement is that they are employed for more than 80 hours across that 28-day period, then that might be an option for you. And there was a third one, and now let me see if I can find it. Gone. Because I've got 2 pages of everything. 11, where is it? A reasonable assumption can be made that your employee worked at least 80 hours in their 28-day reference period. So I'm not quite sure what that means, but they're the 3 reasons the ATO has given us if there's not sufficient records to prove those 80 hours. Okay, so that's the higher rate. If you don't have sufficient records and none of those, you can't fit into any of those, then your eligible employee will automatically go into the tier 2. Okay. They've given us alternate tests. So for employees, the total number of hours in the reference period weren't representative. So that might be for any number of reasons. But they've given us an alternate test. And so it's basically the most recent 28-day period using your pay cycles that represents typical hours. Okay. Maybe the employee was employed partway through the reference period. So we're testing, for example, 1 July for some employees that came in later. If they didn't start until 15 June, well, that's partway through the 28 days of June or prior to 1 July that you would need to test. So the alternative reference test period for those is the 28-day period of consecutive pay cycles, even if it ends after your test date. Same with if they're employed before 1 March or 1 July, but first pay cycle ends. You've got an alternate test and a business that changed hands. So there are some alternate reference periods if what you have when you test it is not representative. Maybe someone took a lot of leave without pay to help in the bushfires, and that's what these tests are designed to take into account. Okay, eligible business participants. Now, because we're testing the whole month of February for an eligible business participant about whether they were actively engaged in the business for 80 hours or more, they've got slightly different alternate periods. So you'll see here we're looking at a 29-day period. And very similar, the total number of hours worked leading up to the test period was not representative of what they normally did. Maybe they started participation after the 1st of February. So maybe it was a newer business, or maybe they're affected by drought or natural disaster, and that might be fires as a factor that meant their business was shut. And so proving that you worked the 80 hours in that 28-day or 29-day period might be quite difficult. So what you're going to do in those cases is they've given us the allowance similar to the employees to look at the most representative in those circumstances, and that might be taking it back. And in some cases, if they started being an eligible business participant after, you'll be bringing into the period where they first satisfied those requirements. So there's some extra rules around that. The big one, how do you get into JobKeeper? We've talked so far about eligible employees. We really need to talk about eligible businesses. So to even get into these rules to start with, it's the decline in turnover test that's kind of changed, and that's something that you'll need to look at with a fresh set of eyes. If you're already in JobKeeper, okay, there's two tests. If you're already in JobKeeper, you've already met the original decline in turnover test period, okay? So you don't need to worry about the first of the two tests, you're already in. You have to worry about the second, which is the actual decline in turnover, GST turnover, okay? A new participant will need to go back and retest against the original test, as well as the new actual decline in GST turnover test. Now, the reality is, if you qualify for the new test, you've already qualified for the old test. So whilst they've got it in here, and it seems a really confusing way to do it, it's actually, you qualify for the new test and you should be able to fall in, but you still need to think that there's two there and just check it off. Right, what's the new test? The only way someone who's already in JobKeeper is going to stay in for the extension period is if they pass the actual decline in turnover test. We are now testing only a quarter. When they first released an extension to JobKeeper, the first press releases or fact sheets or whatever they put out at the time was looking at 2 quarters. They're looking at the June quarter and September quarter. They've actually taken that away because I think what was happening with Victoria in particular is people had reopened their business, so they may not have qualified in the June quarter. But of course, they've shut the state down in the September quarter. So they actually took away the first quarter of test from these rules when they've released them. What we have is an actual decline looking at only one way to measure GST turnover. And the only way they're giving us is what we lodge on our BAS. So basically on an attribution basis for GST purposes. So in the past, we had a statement that allowed us to go and look at the definition of GST turnover, which may be different from what you put on your BAS, as well as we could look at there were some concessions. Well, obviously they let us look at what was on our BAS, and then we also talked about cash and accruals, and I think there was a third one. Right now it's all gone in this new test. We are only looking at attribution basis. Now the rules actually allow the commissioner the power to determine that something, a class, is by legislative instrument, a class of income is included in a quarter that it might not otherwise have been. Now, we've seen no reason or nothing that they've done in that space. But, of course, like with the original JobKeeper, this is going to potentially be a moving target as it morphs. And I can't turn my mind to what they might think is going to be an item of income that they bring into a quarter that may not otherwise be in there, but they've got the power to do it. But right now, if you looked at where you're standing for the September quarter results at the moment, it would be if you ran your GST report on the basis that you lodge your BAS, is September likely to be down on September quarter last year? Okay, you can even look at that now and see how you're tracking and whether that's going to be the case. Some people will be a no-brainer; they've exceeded it. Some people will be significantly under. But you're taking that period to get into just the first, essentially 3 months or first half of the extension period. We're testing September quarter. For the second, we have to retest, and we're going to retest the December quarter against the December quarter. Last year, no monthly testing, it's gone. So you have to be down that 30, we'll base it on the 30%. You have to be down to 30% for the whole quarter. And that's not 30% for 1 month in the quarter, it's the overall quarters down. Now, to be eligible from the 4th of January to 28th of March, you're testing the December 20 quarter. Now, I'll give you an example of what might happen. You might not be eligible because September results were quite strong, okay? That doesn't mean, fingers crossed, the economy progresses on an upward trend, but it doesn't mean that you might not come back in for the December quarter. If you're already in JobKeeper and you fall out for this first tranche of the extension, you may retest and come back in for the second tranche, essentially without doing a whole lot of paperwork. Okay? So just because you fall out of one of these next two periods doesn't mean you don't get the next one and vice versa. Just because you get one doesn't mean you get the second. It requires a retest for each one. Okay. GST turnover. Like, as I said, the new test is based on your actual GST turnover, no projections. And if you think about it, this JobKeeper isn't starting until the 28th of September. Now, the first payments and things like that won't be happening until October. Therefore, you have time to run your September results on actual numbers. Attributions basis, as I said before, i.e. what is reported on your BAS. Now, they have given us some guidance as to the accounting, whether it's cash or accruals method, to specific circumstances. But for today's purpose, if you were going to go and assess whether you think you're eligible, have a look at what you would be lodging on your BAS. If you're not, then we can look at alternate tests as well as what the guidance is on cash versus accruals. Okay. Now, the alternate tests, they say they're coming soon, but it looks like from a press release or some information from one of the deputy commissioners from the ATO, that these are going to be the original alternate tests. And what does this do? Well, this gives you a different period to compare your quarter results, so your September quarter results this year, for example, against a different period than in September last year. When you retest for December, you've got your December quarter this year's results, and if December last year isn't an appropriate period, or well, if you qualify, you stay with it. If you don't, you can look to these alternate tests. The alternate tests for last tranche, and we believe they're going to align with these, a different test period for business that commenced after the comparison period. So if you're a new business, say you started business after your September quarter would have been last year, then you're obviously going to need a different period to test against. So a business acquisition or disposal that changed the entity's turnover. So if something happened last year that's almost skewed the results when you're comparing this year to last year, again, you've got that different test period. A business restructure that changes the entity's turnover. So maybe you've done something last year that actually means this year's gone higher, but you should have had a different period to test against. Substantial increase in turnover, and that's when we sort of had a look at almost like an averaging. That's still there as well. So if you're in a big growth trajectory, then your results are going to be a little skewed, a little hard to compare apples to apples when you're growing. That's what that alternate test is for. Affected by drought or natural disaster. Irregular turnover, so where you have a cyclical turnover, there's a test there. And of course, there was the one for sole traders or small partnerships that had sickness, injury, or were on leave during the test period last year that had meant that their turnover was down. Now, noting though that when we get these alternate tests, expect that we're going to be testing comparing quarter, not month. So when we apply these alternate tests for JobKeeper 1 when it first came out, we were looking at 1 month potentially to a different test month under the alternate tests. Now I suspect we're going to be looking at, well, we have to be looking at a quarter against an alternate quarter, but we're still waiting for guidance on that. So that's my speculation. So the inside information, or it's in the press, is that the alternate tests are going to align, but I'm expecting to see some tweaking to them to accommodate the new test period being only a quarter. Also expecting that the ATO is going to expect you to check a box on your form to note that you've actually applied an alternate test. So there might be an extra disclosure to make to tell them that you're not just applying the GST attribution basis from the equivalent quarter last year, that you'll have to let them know that you're applying a different quarter. Okay, if you're no longer eligible for JobKeeper extension at any stage, you'll need to notify your employees because you're going to be coming in and out of the system potentially. There's going to be some notification requirements, and we better firm those up as we go through and get more information released from the ATO. If you are eligible and you're already in JobKeeper, you do not need to re-enroll or re-notify employees. When you first came into JobKeeper, you would have gone through an awful lot of employee forms and getting nomination notices and things like that. You won't need to do that again, okay? So the issues that I think still need to be resolved are our business participants. So how are we going to let the ATO know that we qualify for the top tier? Is that going to be by declaration? Is that going to be, I'm assuming that there's a self-assessment? Not sure. Haven't seen anything from the ATO on that yet. Now, given this is all new and we're now basing it on actuals, and the month of September, the quarter of September is aligning with the start of the extension, I'm assuming there's going to be some additional time to meet the wage condition, but at this stage that hasn't come out. So the assessment needs to be undertaken now. And be prepared to pay any top-ups up to the Tier 1 or Tier 2 rate as required from that first JobKeeper fortnight or whatever your pay cycle is to align to that. So right now the action items are: have a look at your GST turnover on an attribution basis. Look at your BAS from this year to last year for the quarter. If you're lodging monthly, you're going to be adding them up. Are you down the requisite amount of declining turnover? Second part is assuming that you think you're going to fall in for this next quarter based on the September quarter results. You need to do an assessment of every eligible employee and business participant as to the hours they worked in the test periods, and remembering they were 1 March or prior, the 28 days prior to 1 March and the 28 days prior to 1 July for employees, and the month of February for an eligible business participant. Okay, there are alternate tests for that turnover assessment, but they're things that can all be done now. Most people will know what their next week's results will look like to see if they're going to get close. But don't give up if you're falling out of JobKeeper now. Remember, there is another cycle of JobKeeper, which is starting on early January. You need to test then again your December quarter. See if you're then had the decline in turnover that you needed, or hopefully businesses are recovering, but if they need JobKeeper, that's what it's here for. So test again based on your December results to the same period last year or an alternate period. Again, if you've fallen out and you come back in, you then need to classify each of your employees into a top tier or top payment threshold, or the next tier down if they don't qualify for the 80-hour test. So that was a bit shorter because we're assuming there's a lot of information that you know. Now, I'm going to stop sharing my screen and I'm going to see if there's any questions if people want to unmute or if they want to put something in the chat box. So feel free to unmute, come back on camera if you like, and we can answer any questions that you might have.
So Sally, it's me.
Yeah.
Hello.
Hi.
I'm just checking. How are you? Thank you for that.
That's all right.
Just checking with regard to the GST turnover. Can you just clarify? Will there be an opportunity, say, if I lodge my BAS on cash basis, to look at the accruals under an alternative test, or it's just how I lodge my BAS?
Look, they've only got very specific circumstances you can deviate, and I'll have to look them up. But yeah, basically looking, I think what they've done is they've realised how hard it was to determine whether people were actually eligible. And if you think about it, we had 3 different ways to measure GST turnover. We could do cash. There's accruals. And the only reason you could flip between them back then was in limited circumstances. I think it's going to be the same, but I think what they're trying to do is say, how do we know you're eligible? Well, the BAS tells us. So even though the BAS is often not the strict definition of GST turnover by law, it's an attribution basis of GST. They're using that this time because they've realised they can't compare. So they'll look at they're just going to be straight up looking at BASs compared to BASs, whereas I think last time they've had to do a lot of reviewing to determine when they wanted to do an audit, they actually had to come and audit to figure out if you're even eligible. This time it's going to be quite transparent. So I suspect the long and the short is there's only very limited cases, it seems, and I'm sure we're going to get more guidance, but this is all quite hot off the press information, so very limited. There's a question there. Okay, any idea when we'll know regarding the declaration of hours for sole trader? No, not sure. Sorry, the ATO is updating their website on a daily basis with further information. So I think we're going to have to send around a fair bit more information on the admin side of it once we do that assessment and a bit of a how-to guide. But the ATO hasn't even updated their JobKeeper guides completely yet. So on the ATO website, there are guides and they do cater for sole traders. Just not sure how we're going to prove the 80 hours and things like that. Not sure what they want. Yes. Okay. So next question is, stitching me up, Jake. Thank you. Any suggestions regarding clients lodging their own BASs and including cash flow boost in total sales? Effect on 30% reduction. I don't think the cash flow boost is going to come into it. Do we need to advise employees which tier they qualify for? I don't think we do. I don't think there's any more communication that needs to go back to employees. It probably, if you're topping them up, you're probably going to need to communicate, but I haven't seen any forms come through that you would be, the first time round it was probably a lot easier. There was the $1,500. But I think it's going to be just really on the top ups, having a chat, and that's the casuals and the part timers, and so hopefully you've got payroll records and it's quite clear which tier they fall into, and it'd be quite easy to explain to the employee. They may ask because of course everyone wants to fall into the top tier if they're getting a top up and get the higher amount. So there might be a little bit of analysis that needs to happen for those casuals. And part-timers may be a bit easier if they're on fixed hours. It's probably if they've got some overtime during that period that could push them up. Now, remembering if they don't get top tier in one period, you can actually test the next period, so test that June period. So I would be testing everything if your business was eligible, I'd be testing everything to try and get employees as much as they need. The next one, JobKeeper 1 was all about aggregate turnover. Now it's GST turnover. As we all know, they're both different. Aggregated turnover didn't include, for example, sales proceeds of business assets. Now to the GST turnover method. Is it this sale test? Can you confirm this, please? Look, we actually haven't changed. So it was always GST turnover. It was always your aggregated. Okay, so you will have to count other businesses, but remember, we're looking at really ordinary business income. So it's basically the same rules. All they're saying is we had other ways to look at GST turnover. They're taking away a couple of the options and just basically making it that normal GST turnover on your BAS. So a capital purchase or something that was outside that sort of business. If it was out before, it's probably still out now. And so the first one was GST turnover. It was aggregated GST turnover, that assessment. Now that aggregated GST turnover was only to figure out which tier you fit into for the 50%, the 30%. So we still have to aggregate to figure out how much the decline in GST turnover has to be. So then we looked at our GST turnover to determine, so aggregated turnover to figure out 30% or 50%. That's what that was for. The decline is on a per business basis. So has that business declined 30% or 50% if they're a really large business, or 50% on its own? So the aggregation is just your threshold. that make sense? Please come back if that didn't make any sense, because I remember those first rules. They're a bit confusing, and some people have probably a little bit forgotten how they got into JobKeeper to start with. So I'm expecting there'll be a bit of fuzziness. Now, we are still a bit fuzzy on some of these things, like with the last one. They held back on releasing these rules, and then they dropped them middle of last week, and they dropped alternate tests a day later for test periods, but they haven't actually given us, for example, the alternate tests on comparing one quarter to the next quarter. They've just given us alternate tests on the period which you test the 80 hours. Any other questions? Feel free to type or just unmute. No? Look, there'll be a bit more information. We'll probably do a massive mess. Yes, it is, Anthony. And it keeps us jumping. And then, okay, so another thing I wanted to bring up was with that 1 July test back in JobKeeper 1.1. Originally, when an employee or business participant had put a form in to one business, they couldn't put a second one in if they left that business. So you're either an employee at 1 March or you weren't, and you tested against, sometimes you had to choose. Now, because they brought the 1 July test in to bring in sort of new employees or newly qualified employees, if they had been on JobKeeper for another employer, you can actually now renominate, so long as you're employed by 1 July or an eligible business participant by 1 July. Okay, so there is a different sort of small change. So if you've hired someone and they were on JobKeeper with their old employer, it doesn't mean they're not eligible with you if you had hired them within that period. That's quite an interesting quirk. I had that question just the other day. I went back and looked at it and went, wow, okay, they changed those rules too. So at the moment, is everyone clear on their action items to take away, what they need to do, and that they can do it now? And then wait until the September results are final, but at least you'll have a good feel for where you're sitting. If there's an alternate test, alternate tests get released, we will be doing another mail out. So keep an eye out for another JobKeeper update via your emails. Okay, Karen, sorry. So this would apply to casuals as well. Yes, so if you had a casual that was not a long-term casual at 1 March and they clicked over that 12 months, is that what you mean? Or do you mean that they're now a new casual? So Karen, if you mean that if they're now a new casual, well, remember a casual has to satisfy the 12-month period. So, okay, I'd like to change employers who pay JobKeeper. Good question. I'd have to check up on, maybe. That's my answer. That's my answer on the spot. I don't think it changes because you're casual, but I'd have to check on that. But yes, there was a change of rules that came through with that 1.1. If you're a casual for both, I'm trying to think of the rules madly in my head. I'd have to look it up. So maybe come back to me offline. Do we know a deadline to apply for second round? There's no application for second round. If you were in JobKeeper 1 and you are now eligible for JobKeeper 2, probably should have clarified that. You do need to go back and test that you would have been eligible under the rules for JobKeeper 1 for the turnover decline. Now, you're gonna pass it because you have to pass September quarter. And September quarter was a test period for JobKeeper 1. So let's assume you've passed both old JobKeeper turnover test and new JobKeeper being the actual, okay? If we assume on that basis, you'll go through the normal application process and nominating employees if you're coming into JobKeeper for the first time and it's the extension period. Now, why would that ever happen? Why wouldn't you have assessed partway through this quarter that you're eligible? Some people just didn't realise. Some people didn't want to be part of it. Businesses didn't think they needed it, and now with the extension, maybe they do. And so it won't be unusual for some people to now come into JobKeeper. You'll go through the same process that people have done the whole way through. You need to notify employees that you register with the ATO, you nominate your employees, or give them the form saying you'd like to nominate them, and then you keep those forms on file, and then you let the ATO know who you want to claim JobKeeper for. Now, I don't think there'll be much leeway in timing, but there could be. They could give us an extension like they did. Normally, all of that has to happen in the JobKeeper fortnight in which you become eligible. So that would be a couple of weeks' time, okay? So this period starts on the 28th of September, the extension period. So that's only 8 days away. No, 6 days away. So you'll need to be in that first fortnight period. You need to be topping up, nominating, topping up, notifying the ATO and that sort of stuff. If you're already in JobKeeper, there is no need to go back to your employees and there's no need to go back to the ATO. What you'll have to do in your monthly reporting is tell the ATO which tier payment they're eligible for if you've applied an alternate test in your monthly reporting, and you'll have to still top up along the way like you have been if you've been topping up. Does that make sense? I heard when you have ineligible employees in JobKeeper 2 and you are place an end date, have ineligible employees. Right. I'm not quite sure what you mean there, Anthony. Sorry. I'm just reading the question. It was, I heard when you have ineligible employees in JobKeeper 2 and you are single touch payroll compliant, you need to place an end date and notify the ATO via your single touch payroll. That might be the case. Maybe it's when instead of doing a normal monthly reporting, maybe they're going to put a form up that you notify them that you're now out of JobKeeper rather than going into the extension period. No. Okay, so there's another question here. Sorry, do we need to test June quarter and September quarter as well? When they first announced the extension, they announced we'd be testing June and September to get it. They took away June. So now we're just testing one quarter. So to be eligible for the first tranche of the extension, taking us basically till the 3rd of January, we test the September quarter. Then we retest the December quarter to get it from the 3rd of January to the end. Okay, you can drop out, you can come back in, you can be eligible now and not eligible for December, so you can move around. It is a retest date. Remember JobKeeper 1, once we were in, we stayed for the 6 months. This next one's broken into 2 different periods, and that's because they're realising that businesses are going up and down. Would not have no, yeah, most people actually, it's quite interesting to add to that. The point was we would not have qualified with June quarter, but September quarter we have much higher reduction. And I think that you'll find that depending on where you're located and what industry, everyone did a bit of a bounce back. And you think that the JobKeeper extension is really for the poor Victorians who are in lockdown, and some areas in New South Wales as well, definitely have been dramatically affected. So you may have actually bounced back, and then the second wave came and you got shut down again. And so that's why they had to take away that June, because no one would have gone in for June, or they would have really struggled to get in for June and then September, because we did have a bit of a bounce back. Okay, Anthony's saying top payments can be made up to the 31st of the 10th. Great. So we've got the extended period to make the top-ups like we did the first time. Remember, they gave us an extension, then gave us another extension because they realised it was ridiculous. So you've got a bit of time to sort this out, but you can at least, I'm sure you want to know for your own cash flow forecasting or looking at where you're going to stand the next quarter. You probably want to get onto it as quickly as you can to figure it all out. If you're coming in new, you definitely want to be on top of it. Remembering that you're only going to get paid JobKeeper in arrears, like in the old period. Any other questions? Did I miss any along the way there? No? Are we all good then? So, look, if you've got a Moore Stevens advisor, whether that be, I know that some people from here are from the New South Wales office, please reach out to them. Reach out and ask the questions that you have, particularly your circumstances. It's a bit of a moving feast on the information as it gets released. We expect that what we know of the rules, we've got most of them, and there's going to be a lot of administrative changes, and obviously there's been a deferral. of that lodgement, those top-up periods like we had the first time round. So that sort of information will come to light. So please reach out to your Moore Stephens advisor and have a chat to them about your circumstances, and maybe a little bit of homework to do in the meantime to have a look where you stand for the quarter. Thank you for your time.